Today, crypto markets react to the Fed raising interest rates. Cathie Wood dumps shares of Coinbase as the company faces an SEC probe. And a new report claims Kraken might have violated sanctions against Iran. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto markets are trading higher this afternoon, even as the Federal Reserve hikes interest rates. By 2 p.m. Eastern, Bitcoin was around $22,000, Ether sat at $1,500, and Polkadot was right around $7. Now, as I said, the U.S. Federal Reserve just raised interest rates today by 0.75 of a percentage point. That's the second straight rate hike at that level, and it's all in an effort to bring down inflation. Digital asset prices have been reacting to moves in interest rates all year long, so crypto investors have been watching for hints from the economy on whether the Fed will slow down or speed up its monetary tightening. Now, the Fed did say that it sees softening in the economy as consumer spending and production slow down, but it said that job growth remains strong and unemployment is low. Okay, on to the top stories. First up, Cathie Wood just sold more than 1 million shares of Coinbase from the ARK Innovation ETF. Wood also trimmed Coinbase holdings in 2 other ETFs as well. And all told, that sale came to about $75 million. And Cathie Wood wasn't the only person selling the stock yesterday. Coinbase shares fell by more than 20% after news that it was facing a probe by the SEC to determine whether the exchange listed unregistered securities. Next, Kraken could be facing an investigation by the Treasury Department. According to the New York Times, Kraken is suspected of violating U.S. sanctions on Iran by letting Iranian citizens buy and sell digital tokens on the platform. And Kraken isn't alone either. An investigation by Reuters this month claimed that Binance was still serving users in Iran despite the U.S. ban. Now, the U.S. bans economic activity with Iran over the country's nuclear program and funding of terrorist groups. Last up, El Salvador's president is trying to keep the country from defaulting on its debt. President Nayib Bukele just sent 2 bills to the country's lawmakers that would fund buybacks on 2 types of bonds. The goal is to shore up the nation's cash reserves and prevent default on its debt. El Salvador made waves when it made Bitcoin legal tender and added millions of Bitcoin to its balance sheet. Well, CoinDesk reported that the nation's Bitcoin investment is down more than 50%, representing a $55 million loss. Okay, for our main story of the day, Crypto World's Tanea McKeel spoke to David Zell, co-founder of the Bitcoin Policy Institute, about the current crypto winter and how economic policy in the U.S. could lead to a crypto spring.
All right, David, thanks for joining us. So first things first, I want to get your reaction to Fed policy. We are in an environment of persistent inflation. Rates keep rising. A lot of investors are worried about a potential recession or that we may possibly already be in one. Do you think that this round of rate hikes by the Fed is going to keep Bitcoin prices or investor interest in crypto depressed over the long term?
Certainly not over the long term, but I think it's definitely reasonable to assume that increased action by the Fed is going to make some investors wary of crypto and Bitcoin in the short term. Long term, though, I don't really think it has much to do with Bitcoin's fundamental value.
The correlation with stocks, particularly tech stocks, has really been a theme this year after we saw a bunch of institutional investors jump into crypto just in the last couple of years, and a really challenging macro environment kind of dominating the moves in crypto prices this year. How long do you expect that correlation to continue, and does anything about the current round of rate hikes help inform where that goes?
Yeah, I think it's pretty reasonable to see Bitcoin moving in correlation with the broader equities market. I think that's true for 2 reasons. One, clearly, Bitcoin is a risk-off asset, and it's the first thing that people are going to be unloading during times of uncertainty or when the Fed is raising rates. But I think second, the broader trend here is that as more people understand what Bitcoin is and how it works, I think we're going to start to see a decoupling between the price of Bitcoin and broader equities. Ultimately, Bitcoin's value comes from the fact that anyone, anywhere in the world, as long as they've got an internet connection, can make a payment to anyone else anywhere, that can settle instantly, nearly for free, that can't be censored or seized. And I think what we're watching in real time is the global market try to figure out what the heck that is worth. And so for now, it makes a lot of sense that Bitcoin is trading the way that it is.
We also have the SEC, and the crypto industry for many, many years has sought clarity from regulators and particularly from the SEC. So, right now it's trying to regulate through enforcement rather than providing that clear guidance or framework. Its probe of Coinbase and its insider trading case against a former employee at the company. What is your reaction to that methodology from the SEC?
Yeah, it was bizarre, right? So the SEC alleged that the defendants in this insider trading case committed securities fraud by using material non-public information to trade ahead of Coinbase listing announcements. Now, to establish jurisdiction, the SEC argued that the assets in question, 9 digital assets, are unregistered securities. Now, it's not crazy to learn for the first time that, for example, the SEC has identified a violation when they file a complaint. But usually when that happens, the agency is filing an action against the person or the entities who they think broke the law. In this case, it's a little bit different. And so while we can applaud efforts to curb insider trading, it's not appropriate that the first time we've learned the SEC's views on the security status of these tokens in questions came through an unrelated enforcement action. And so, yes, to your point, I think industry advocates are ready for the SEC to finally make clear which cryptocurrencies and digital assets are securities and which are not. Because regulation through enforcement rather than guidance or rulemaking is a bad look for the country. It's bad for investors. It's bad for innovation and helps no one. Now, fortunately, we know that Bitcoin is a commodity, and it's important that viewers understand this. So while Bitcoin's regulatory status is confirmed as a commodity, the SEC needs to move quickly to make sure that investors know how they feel about what the digital assets that they're buying really are.
Given the bear market we're in, given how many more participants there are in the market compared to previous years, what would you do now if you were in charge of fixing the regulation in crypto?
I think the most important thing is to understand that there is a difference between Bitcoin and cryptocurrencies. And I think what makes regulation and conversations about regulation especially difficult is the breadth of digital assets. So when we use the language cryptocurrency or digital assets, it can be tough to know what exactly we're talking about. Since the advent of Bitcoin, there have been anywhere from 13,000 to 19,000 cryptocurrencies. Now, about 67% of those have lost investors more than 99% of their value. In other words, gone to zero. And so when you have an industry where 2/3 of the tokens that are being sold and marketed are guaranteed to lose investors money, it's tough to have those things in the same conversation as, for example, Bitcoin, which is the best performing asset of all time, has a clear regulatory status, a clear use case, and a clear value to people beyond speculation. And so I think the most important thing from a policy approach is to not lump all of these technologies together. But more broadly, aside from clarity from the SEC, I think it's actually going to come down to states in many ways. Innovations like the Lightning Network, which function on top of Bitcoin and allow for seamless, fast, and cheap payments, can be constrained by outdated money transmitter laws. And so that's the other area that I would really want to see increased attention from lawmakers on.
All right. I want to get your take on the outlook ahead for crypto.
It's always tough to call markets, but I know one sign historically will be miner capitulation. So when we start seeing Bitcoin miners fold, selling their ASIC rigs to entities that are better capitalized and better poised to weather the storm, that's a good indicator of a market bottom. As far as what to watch, you'll just have to watch the price of crypto. There's not much that I could point to that would be a clear sign that, as you put it, the spring is here. The last thing I would note is that while past performance is, of course, not indicative of future results, we have seen a bit of cyclicality to all of this, right? Every 4 years, we've had these massive bull runs, these massive price crashes, And for context, right now, the total crypto market is sitting just around its 2017 highs. So if I had to bet on it, I wouldn't be surprised if we were trading around here for a while before we started to see another bull run.
Okay, that's all for Crypto World today, but we are back again tomorrow and we'll see you then.